This new AI-based TradingView indicator I'm about to show you in this video will no doubt blow your mind. It has a win ratio of 81% and it has generated over 1600% in profit in just 4 weeks. It has one of the highest profit factors on my channel and its drawdown is only 4%. The strategy is 100% free and most importantly, it does not have a bunch of rules to follow, which makes it suitable for beginners as well. Traders, no matter if you're a beginner or an expert, you should backtest every strategy you're planning to trade with. You can do the backtesting manually, which is fine, but if you really value your time, TradeIQ is the backtesting app I personally recommend. It is very simple to use. All you need to do is to set your initial account size and the profit and loss per trade. If you don't know how to backtest, no worries, you will get a full course for free as well as some other bonuses that have $470 in value. TradeIQ has a free trial, so go ahead and check it out. I will leave a link in the description below. Okay, currently we're looking at the price of Ethereum USDT on a 3-minute time frame. So how can we add a magic AI indicator to the chart? Well, first click on the indicators menu and search for AI-Engulfing candle. The one that you're looking for is this one right here. As you can see, pretty much no one knows about this tool yet. After we've installed it on a chart, this is what it looks like. The indicator simply tells you when to buy and sell by printing these red and green labels. These are bullish and bearish engulfing price bars. If you don't know what an engulfing price bar is, it's when the latest candle completely engulfs the candle to its left. However, if we add a regular engulfing candlestick indicator to the chart, we can see a massive difference in signals. Why is that? Well, the answer is simple. AI engulfing candle indicator signals are filtered by relative strength index. For example, the indicator shows bearish engulfing candles only when the RSI is overbought. As for bullish engulfing bars, they appear only when the RSI is oversold. This indicator allows us to filter out pretty much all the signals in a ranging market, which is, well, really cool. If we take a look at some of these signals, we can see that accuracy is definitely there. But we still have some fake ones that could have resulted in loss. In order to eliminate the majority of them, I came up with a brilliant idea to add another indicator, which is called Fluid Trades SMC by PMGJIV. Once you've installed it on a chart, access its settings and hide some features we don't need. Simply set the opacity to 0. The Fluid Trades indicator finds supply and demand areas in the market. Supply zone is colored in gray, demand zone in blue. These areas tell us at what prices the majority of buy and sell orders are sitting. When price reaches some of these levels, there is a high probability of a reversal happening. So how can we combine these two indicators to get the absolute best trade entries? Well, let's now dive into the entry conditions for this strategy. For a buy trade, wait for the price to retest the level of demand. The price bar should get really close to this level or even touch it. Once we have that, the AI engulfing candle indicator should give us a buy signal. That's it. These are the rules. I told you, they're very easy to understand. Place a buy order at the close of the price bar and set the stop loss slightly below the level of demand. Do not set any profit targets. Simply wait for the price to move in your favor, and once the risk reward gets to 1-to-1, adjust the stop loss to the entry price. Your risk, for example, is 2% of your account per trade. If that is the case, the trade is currently running at a profit of 2%. When the position reaches a profit of 4%, adjust the stop loss so that you can protect 2% of that profit. If the position reaches a profit of 6%, move the stop loss to protect 4% of that profit. Keep doing that until your stop loss eventually gets triggered. This way you allow yourself to win big by risking small. Okay, let's take a look at another long example. Here we have a strong rejection of our demand zone. At the same time, the indicator spotted a bullish engulfing candle bar. All the rules are met. Do the opposite for sell entries. First, wait for the price to retest the level of supply. In addition, the indicator must issue a sell signal when the rejection occurs. Enter a short trade only when you have these conditions in place. Apply the same money management rules as for long trades. Okay, let me show you some more examples so that you have a full understanding of the strategy. Make sure to not skip this part. Pay attention to all the details. By the way, the strategy also works in other time frames. You can use it on both 5 and 15 minutes as well. It is suitable for trading cryptocurrencies, forex and stocks. You can improve the strategy even more by adding a volume indicator, for example. If you have any good ideas, feel free to share them in the comments below. Also check out my other videos on the channel for more high win rate strategies.